cost spike. Here's why your car insurance rates could triple this year. Hey there, welcome back to our channel. Are you tired of paying high car insurance rates? Well, brace yourself because things are about to get worse. This year, we expect cost spikes that could triple your current car insurance rates. But don't panic yet, we're here to help. In this video, we're going to break down the reasons behind the cost spikes and give you some practical tips on how to keep your costs as low as possible. We'll also discuss ways to adjust your budget in anticipation of these higher rates. So, if you're a car owner, you won't want to miss this. Keep watching and let's dive in. Why are we expecting such a drastic increase in car insurance rates? Well, there are several things at play that all contribute to this end result. One of the biggest factors driving these price spikes is the current economy. Basically, when the economy is doing well, people tend to spend more money on things like cars, travel, and luxuries they wouldn't typically buy. As a result, there are more cars on the road, more people traveling, and more potential for accidents and claims. Insurance companies are well aware of this and often raise rates to account for the increased risk. Additionally, people tend to have more disposable income when the economy is doing well. This can lead to higher demand for car insurance and put upward pressure on rates. Insurance companies know that people are willing to pay more for coverage, so they may raise rates to capitalize on this. But unfortunately, as the economy is struggling, such as when the pandemic happened, insurance companies are also facing a decline in their profits and struggling to cover their expenses, leading them to increase their rates. But that's not all. Another reason for car insurance rate increases is moving violations. Traffic tickets can be a real pain, not only because of the fines and potential legal consequences, but also because they can cause your car insurance rates to go up. Essentially, when you get a traffic citation, it's like a red flag to insurance companies that you may be at a higher risk to insure. Think of it this way. Imagine you're a car insurance company, and you're trying to predict how likely a person is to get into an accident. One of the things you might look at is their driving history. If someone has a lot of traffic violations, it stands to reason that they may be more likely to get into an accident than someone who has a clean driving record. So, when you get a traffic ticket, it can cause your car insurance rates to go up because the insurance company may see you as a higher risk to insure. The good news is that the effect of a moving violation on your insurance rates will typically decrease over time, as long as you don't get any more citations. Different types of traffic violations will have different levels of impact on your insurance rates. For example, a speeding ticket may cause your rates to go up less than a ticket for reckless driving. However, a DUI can cause your rates to go up significantly. But also remember that different insurance companies have varied policies when it comes to how they handle traffic violations. So it's always a good idea to shop around for insurance quotes. FreeAdvice.com makes it easy to compare several insurance providers near you. These online comparison quotes are free and don't require private information like social security numbers. Online quotes are a great way to see how moving violations will affect your rates. For example, if you have one speeding ticket, you can put that information in when obtaining your free quotes. This way, you can see how much each provider charges for your specific driving record. Another factor that can send your insurance rates soaring is being found at fault in an accident. Accidents of any kind are a major pain, and usually a financial burden due to all the damage they cause and potential injuries. And if you need to file a claim with your insurance provider, there is a good chance you will see an increase in your rates. Usually, that increase won't be too drastic. On the other hand, if you're found to be at fault for an accident, your car insurance rates are likely to skyrocket. When you have an at-fault accident on your record, it's a big red flag to insurance companies that you may be a higher risk to insure. Let's use an analogy to help explain this. Imagine you're a car insurance company and you're trying to predict how likely a person is to get into an accident. One of the things you might look at is their accident history. If someone has been involved in multiple accidents and found to be at fault, the odds certainly show they're more likely to cause an accident again. There's no way around it. Drivers with accidents on their records, especially at-fault accidents, look a lot worse than someone with a clean accident history. So when you're found to be at fault for an accident, it can cause your car insurance rates to climb because the insurance company sees you as a high risk to insure. The good news is that the effect of an at-fault accident on your insurance rates will typically decrease over time, as long as you don't get into more crashes. Being at fault in an accident can also lead to legal consequences, as well as fines and criminal charges. These types of accidents make you responsible for damage and injuries caused, and can have long-term negative effects. That's not all. Here's another reason your car insurance rates increase: your credit score. This number that represents your credit worthiness can affect your car insurance rates a lot more than many realize. Your credit score plays a big role in determining how much you pay for car insurance coverage. Here's how it works. When you apply for car insurance, the insurance company will look at various factors to determine how much of a risk you are to insure. One of the things they look at is your credit score. If you have a lower credit score, the insurance company may see you as a higher risk to insure, and as a result, they may charge you higher rates. It's worth noting that not all insurance companies use credit scores to determine rates. In fact, in some states, providers aren't allowed to base rates on the quality of your credit. If you're shopping for car insurance and want to know if a company uses credit scores in its rating process, you can ask them or check their website. Also, FreeAdvice.com provides company comparisons based on these rules and what rates to expect with various credit scores. Now, if you have a low credit score, don't panic. There are things you can do to improve your credit score and lower your insurance rates. Paying your bills on time, keeping your credit card balances low, and disputing any errors on your credit report are all ways to improve your credit score. Do you think a gap in your car insurance coverage won't make a difference in your rates? Think again. A lapse in coverage can also make your insurance rates skyrocket. A lapse in coverage can be a real problem, not only because it leaves you uninsured, but also because it can send your car insurance rates through the roof. Essentially, when there's a gap in your coverage, it tells insurance companies you may be at a higher risk to insure. Imagine you're a car insurance company, and you're trying to predict how likely a person is to follow the law and make their payments on time. One of the things you would look at is their insurance history. If someone has gaps in their coverage, it shows they are more likely to drive without insurance or forget to pay their bills. So when you have a lapse in your coverage, it can cause your car insurance rates to increase because the insurance company sees you as a higher risk to insure. The good news is that the effect of a lapse in coverage on your insurance rates will typically fade over time, as long as you maintain continuous insurance coverage in the future. Are you now feeling the unavoidable pain of high car insurance rates? Well, the last and the longest standing factor that can drive those rates up is none other than the longevity of your coverage. Regarding car insurance, the length and consistency of your coverage is the frequent flyer program for your premiums. The longer you have been insured with a company or have maintained continuous coverage, the more points you earn and the more likely you are to qualify for discounts. So, if you're a loyal customer with a long record of continuous coverage, you'll be rewarded. Most insurance companies offer discounts for customers who have been with them for a certain length of time and for those who have maintained continuous coverage. The longer you have been insured, the more likely you will get rate discounts. So, if you haven't already, shop around for insurance quotes at FreeAdvice.com and maintain continuous coverage with a top provider so you can enjoy the benefit of lower rates in the future. Are you now feeling like your car insurance rates will break the bank? Don't lose hope. While certain factors can cause rate spikes, there are also things you can do to bring them down. Here are some of the ways to mitigate rate increases and keep your insurance costs low. First and foremost, be a safe driver. This may sound obvious, But the safer you drive, the less likely you will be to get into an accident. Avoid distractions while driving, obey traffic laws, and be aware of your surroundings. This will help you stay safe on the road and reduce your risk of accidents and claims. Second, shop around for the best rates. Insurance rates vary greatly from company to company, so it's important to shop around and compare rates. Take the time to research different insurance providers and compare the rates and coverage options. This will help you find the best rates for your specific needs. FreeAdvice.com makes it easy to compare rates from top providers in your area. It's free and there are no strings attached. Third, be proactive about your safety. Install a GPS tracking device in your car, or you can sign up for the anti-theft and driver monitoring program with your provider. These types of devices will help you track your car's location, reduce the risk of theft, and help you get rewarded for low mileage and safe driving. Fourth, adjust your budget. Knowing that insurance rates are going to increase, you can start to adjust your budget and make room for the extra expenses. You can start by cutting unnecessary costs and saving more money. As you can see, some of the causes for rate increases you can mitigate, but inflation, higher manufacturing costs, and the overall state of our economy are reasons we can't directly control. Best to buckle up and get ready to pay a little more each month. Thanks for tuning in to our video about why car insurance rates are spiking across America. We hope you found the information helpful and informative. Car insurance rates are influenced by various factors, but by practicing safe driving habits, maintaining a good credit score, and keeping your coverage continuous, you can help keep your rates in check. Remember to shop around for the best deals, and always be aware of the current economy, as it can greatly impact your insurance premiums. We'll see you in the next video. Don't forget to subscribe so you don't miss it. Take care and drive safely.